Now, speaking more on the candles or ranges thing, let me just go back to Bitcoin a bit. BTC, USDT. Let's go back to Bitcoin and let's see what happened here. Candles or ranges. And this is something I didn't want to really share with anyone, but you got it. You got it. We've been working inside of this range of this specific candle this whole while, which is why 32,000 is the goal, right? Almost there. We've hit the, have we? Almost. We are almost there. If you noticed, candles or ranges, we're still working inside of this candle. We've not left. These are all inside candles. This is all price action happening within the main. This is the bias. This is the draw on liquidity. This is why when some goofballs on Twitter were trying to call a top over here, they failed. It is precisely because of this. Because of this concept of mine, right? This candle was a range. This range was truly broken, closed above. When we close above a candle, we expect higher prices. That's it. And I'm going to sneak y'all one. The thrust candle is a good stop loss. Anyway, we bang into this range. Candles are ranges. Close range. Retest the range under the pretext of an FVG or an order block, whatever. It's simply a range. Opening price, slam into it, rally. This one, falsely broken range. FVG, quote unquote, right? And we smack right into, we work through the candle. Good old 1, 2, 3. And this is for your homework. Check what was up here. You're probably going to find a range. The classic range you see me draw all the time. A higher time frame, PD array, key level, quote unquote. 1, 2, 3. Anyway, you got this. We're working within this candle. We're targeting 32,000 US dollars on Bitcoin, right? Probably something like this. I'm assuming. Now, let's work this idea on the daily range. First of all, let's discuss the daily range. The daily range has been divided into two. It's been, not divided, it's been described, let's say. It has been described into, oops, look at that. You know what, let's check this out too. Candles are ranges. Let's go to the weekly. What is this? This is a range. Turtle soup at the lower end of this range and at the upper end. So turtle soup here. Each one takes us to target 150%. That is a super important note. If you reverse engineer your trades, especially the break-even stop losses, you'll notice that a lot of the mistakes come from not taking partials at the 50%. Turtle soup, breaking above the candles range, and then retesting this range and going higher. It happens all the time. Now, disclaimer, do not try and use this without understanding order flow. Otherwise, you're probably going to fuck it up. Market profiles, order flow, and chart time. which is why I didn't really reveal this thing until now, except after putting out first the market profiles and now putting this on. Anyway, I had a very specific one. I've been kind of outside the markets, to be honest, lately. However, I did have a specific trade I had shared with you all. Same idea, by the way. Let's check this out. This is one specific candle, right? This candle is smacking into this low, right? So in everyone's eyes, it's a market structure shift. So this one specific candle, we're going to work inside of it. Not a random candle. The candles that dig into the lows. Mondays, week 1. The Asian range, right? When it's ranging, etc. This specific candle, we are working through it, right? So we've, even this one, by the way, this one, I think this is the one I traded. Right up here. Before I go into this one, let me remind you of the anatomy of the daily candle. It's been divided into many ways. You can either use the 0, 6, 12, 18, the 6-hour candles, which I don't like so much. You can use it. Or you can use the 1, 5, 9, 1, 5, 9. Right? Let's go even deeper. Of course, this being 13, 17, and 21. All right? What does this mean to you? These are the opening times of the 4-hour candles. I've mentioned before that in the recordings that the opening times are fixed and the closing times are fixed. So that's 50% of the equation solved already, right? But using this concept, this frees you from the kill zone mentality because you know what the kill zone means. There's a candle which opens at 1 o'clock, 5 o'clock, 9 o'clock, 1, 5, and 9. And isn't it funny that the ICT kill zone is 2 accumulation, 9:30 and 1:30? It's kind of strange, no? Yep. It is. This is partly the reason why ICT has introduced the idea of the 9:30 Judas. Why? Because 9 to 9:30 is accumulation. I've brought light to this cycle, if you'll call it, right? Which is 9 to 9:30 accumulation, 9:30 to 10 is manipulation, and 10 to 10:30 is distribution, right? With a plus minus 5-10 minutes. Macro 9:50 to 10:10 macro, whatever that means. So bearing in mind these numbers, right? If you look at the tweet attached to this recording, right? I'm not sure if I can find it, but it was one in which he mentioned, and I must give him credit for this, to inspire the thought, when he mentioned that when you look at the 4-hour candles and the 1-hour candles through a lens of power of 3, then a whole new world opens up to you. A glimpse of that, of course, is this right here. We're ranging, right? Consolidation. Nine o'clock is the time the candle opens. News embargo, they said. 9 o'clock, the candle opens. We're working through that specific candle. We have dug into an old low, right? If you notice, even on the 10-minute time frame, or the 15-minute time frame, we're still working through this candle, by the way. We haven't left this candle, right? This specific candle, we have not left it. We're still working inside of this one candle, right? If you look at the 1 hour, it's the same exact thing, right? So we open the 4-hour candle, we dig into the low at 9:30. We close above the candle. When we close above a candle, we expect higher prices. Order block confirmed. And rally. Right? I'll tag a couple more examples, but this is my favorite way of using the 9:30 manipulation, or the Judas swing, through the context of the 9 o'clock open of the 4-hour candle, right? Over here, you got this. You got a chop, 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 chop fest, chop fest, chop fest during the previous two candles. Right, if you remember. 3-candle pattern of accumulation, manipulation, distribution. Accumulation, manipulation, time for manipulation, and distribution. Right? A more recent example, NASDAQ 100. Same exact thing happened over here. Even though it's been a while since I've looked at the indices, I had watched this one, I think it was last Friday, if I'm not mistaken. If I'm not mistaken. Here, let me make sure. It's been a while. Let's take a break as I look through the trade. The trade was indeed during the 21st of July, which is a Friday. Yep, I was right, as always. So you got this Friday. Let's go to the 1 hour. NASDAQ. Gorgeous. Now, we have come to another important model, if you will, which I've mentioned before, right? But before I mention it, let me just apply this once more. What do you see over here? And again, this trade will also be quoted. What do you see over here? Within this candle, we're trapped inside of it, right? We are working our way within this 4 hour candle. Range high, range low, a timed range, whether it's the previous thick 4 hour candle digging into a low, right? That's a criteria. Whether it's Monday, week 1, whatever, the Asian range, whatever. Let's mark 9. And this is a time that works best with the indexes or the indices. For Forex, it's better to use 1 a.m. New York time. Right, usually by 3 a.m. the swing point has formed. Right, we'll get into that right now. But right over here, 9 o'clock, you get that accumulation. You get the manipulation at the time designated for it, 9:30. At 9:30, we tap into the high of that specific candle we're working inside of, right? So whether you think of it as the previous day high, which is an excellent proposition, or you think of it as the 4 hour candles high, right? You got this, you got a rally, turtle soup, market profile, down, breaking lows, rejecting highs, any pop-up of highs, but to be so smack back down. You got this, 9, the time, chop fest, 9:30, rally and decline into this market maker sell model, original consolidation, and of course, the classic final fake pop before the equal lows. That is also a model by itself. You've been given like, I don't know, 3-4 models already. Another classic model is, if you want to talk about pattern, market maker model, right? Equal lows over here. And on the way, on the sell side of the curve, right? Equal lows. On the sell side of the curve, before hitting the original consolidation, there's going to be a pop above an important high. Before collapsing, this suckers in a lot of people. That is a model by itself, right? The same applies to 130. This exact same model is happening at, you remember, 159, 130. Well, you can really say 1, but 130 is the time for the manipulation to happen. Starting from the 1 o'clock 4 hour candle, we're hitting the previous 4 hour candle's high, and here comes the breaker, right? Want like a breaker? Here's a breaker for you. FVG order block breaker combo. But I don't really pay attention to that. I'm paying more attention to the highs and lows and the time it's happening. And the market profile, breaking lows, popping above a high, opening price. Remember the criteria of being bearish? We sell above, we wait for a rally above, when we're bearish, right? This is the narrative, the context, range high, range low, draw on liquidity, sell side of the curve, 9 o'clock manipulation, 1 o'clock manipulation, 1:30 is the time designated for manipulation, right? You got this. Opening price, a fixed opening time, rally, creating a range, distributing into a key level, above a high, bearish market profile, and smacking back down into the low. This is the model. And it is fractal, it is universal, across all time frames. Right? Now, this is the 9:30 and 1:30, which are the times I usually like to trade if I'm going to trade intraday. Right? And this is how I do it. What about London session? Pretty much the same thing, right? 159, 159. Some people like to use a 06, 12, 6. I don't know. I don't like it. I'm more used to this one. If that one resonates with you more, then who am I to tell you no, right? At the end of the day, the goal is to take your model, the one which you resonate with, whatever I say, I can say whatever I want. But if you resonate with a model which I don't, that's fine too, right? As long as you make money, you are not wrong. Now, why didn't this high pop up here? Why didn't it keep going? Well, because we are now on the sell side of the curve. We're profiling the market, right? Remember what I said before at the beginning, which is price levels are useless. Let's write that down. Good old quote. Price levels are useless until the time is considered. Time is useless unless we are at a key level. And by the way, this is a mid-study announcement. Whoever brings the best notes, right, because my teaching style is a bit overwhelming, I can understand, but that's the way my information is fired out, and it's produced pretty good results in the last one, and I'm expecting no less from this one, especially with what you've been given. The best notes of the whole thing get a prize of $126. I'm waiting. Now, let's look at finally the example of the 1 o'clock open and how you can use that. And then touch on rejection blocks, and we wrap this up.